Hi everybody, ILUS shareholders, past, present, future, ILUS family, ILUS friends. So here we are today just to do a summary of basically our proposed shareholder meeting that was supposed to happen on the coming Friday. And we're going to go through the same information, same data that was due to be discussed. At a relatively high level. Obviously, we're trying to compact this into, a shorter, more manageable, chewable edit, which I think will ultimately be better for the shareholders anyway, because you will get a wider audience able to view several segments of, several minutes each, as opposed to a whole day's commitment of time. So while we, would have loved to have met everybody and caught up with everybody, circumstances prevailed that it probably wasn't in the best interest of everybody. So just to get on to that point, we had a number of people expressed that they couldn't make it and would love to have made it, and many of those are very long ILUS shareholders who have been shareholders for a long time, very loyal. We felt it was almost rude and disrespectful not to honour them, because there was a number of them. I'm not talking 5, I'm talking like 20 or 30 that couldn't make it. So on that basis, that was already in the back of our mind. And then we had a number of people over the last few days message in to cancel for whatever reason. And I think obviously, perhaps the timing wasn't suitable with, in the middle of a public holiday, a few weeks out from school holidays, middle of Miami summer, etc. However, we made the date based on the fact that we didn't want to delay it any longer. We needed to press on. However, here we are. And we're going to make this as informative as possible, give everybody the information that they're looking for and desperately needed and deserved, and spell out what the past was and what the future looks like. I think we're in a good position going forward. So I guess we're going to do the next section really encapsulating the 2 years that were lost. Even 23 and 24 were years I'd like to delete from my life for sure, and I'm sure many of you would too. However, 25, 26, 27, I think are going to be great years for everybody. So I guess summarizing, this is like a mega make ILUS great again. Right, so on a general look back, before we get into kind of the future parts, which we'll get into as we do subsidiary by subsidiary and the overall company, but at this particular point, let's look back in the last 24 years of Blur. I think a lot's been achieved against a heavy headwind, which I don't think necessarily the market really understood our individual circumstances, put it that way, and a lot of the things were so fluid that it was not possible to actually report on them. Things were moving almost daily in a very dynamic way, and also obviously the access to capital was severely difficult. So being able to be very sure, being able to deliver on certain promises or certain obligations or certain topics that were mentioned to shareholders wasn't always going to be possible. So we were essentially setting ourselves up, with a noose around our neck every time we mentioned anything, not knowing exactly how it was going to be delivered. So on that basis, things that weren't material, we tried to, let's say, keep tight until we knew that we could actually deliver it or had delivered it. But really, in a nutshell, the last 2 years really was about managing a war zone, literally. I mean, I know that's probably a bit inappropriate to say that as we are here today with these wars going on. But it was exceptionally tough in the nano-cap, micro-cap space. It still is. However, things are improving, I won't say drastically, but they're improving nicely on the way forward. And fortunately, we've got ourselves in a very, very, very good situation, which I'll explain a little bit more for those of you that don't, understand our last NASDAQ deal. So, kind of keeping it at a high level. We obviously suffered tremendously through the last 2 years. We were unable to raise capital, and the capital we could raise was at ridiculously expensive terms. And while obviously we get annoyed by it, we do have to be grateful for those funders that did provide that capital through those times of need. While it was expensive and has hurt us, and we're still carrying the scars and wounds and healing from it, ultimately, without that borrowing, we wouldn't have got this far. And on that note, someone actually mentioned to me the other day that, he said, I was talking to this, micro nano cap broker, banker, whatever you want to call him, and he was saying, well done, you guys have made it. I said, no, we're so far from made it, but we at least now made it to land. Now we've got a clear path ahead. The last couple of years have been very tough. And he said, no, if you look back into 2021, all the big stocks that were trading, that were the big names on OTC, majority of them have gone. He said there's like a handful of you that are actually left and still trading, and ultimately still have some business going forward that's got a prospect. Most of them have gone. I haven't had the time to go back and do the due diligence and actually verify that, but I certainly don't hear the same names around the market that we were hearing in 2021. So on that basis, I think, while we may not have performed as well as everybody would have liked us to, I think we did a phenomenally good job of steering through a very, very tough situation that the majority of companies died or fell by the wayside. So on that note, I am pretty proud of the team, and ultimately I do need to thank you shareholders for sticking by us. And continually fighting our battle in the Discord rooms and, on Twitter and wherever else, or X, wherever else. It's obviously been a tough time for everybody. Everybody's seen their share prices and, their portfolios disintegrate. And obviously people were always, a lot of people had big exposure on our stock. So obviously felt our price movement the most, and therefore we became the biggest devil. But I can assure you, we didn't lose focus. And, we continued to do exactly what we said we were going to do from the start, and we've continued to work very, very, very hard at that, and I think we've covered tremendous ground. And as we reach, we reach kind of, let's say, the starting point now of a new chapter. I actually feel we're in a very, very, very strong position going forward, a very strong position, which again I'll explain as time goes through this session. I can't say we're the strong, we're in one of the stronger positions on the OTC, but I would like to say that, even though I'm probably not supposed to. So, kind of, if we look at kind of some of the general stuff, obviously we had a huge difficulty raising capital, and the capital we did get was obviously very, very, very expensive, which has obviously hurt our cap table tremendously. We obviously had the issue of unwinding the Quality Industrial deal, or the Quality International deal, acquisition. That was obviously all, 8K'd and PR'd a while back. That was obviously in our subsidiary QIND, which obviously had a massive knock-on effect onto our financials, because we obviously consolidate. And that obviously raised all sorts of knock-on troubles, or challenges, should I say, which have now more or less all been ironed out. And obviously, again, we came back strong, found another acquisition, completed the acquisition, did the acquisition, and have since sold the whole subsidiary to a NASDAQ company, which we'll talk about later. So I think while it was a difficult time, I think we made the most out of it, and I think we did well out of it. As messy as it might have been, I think we did very well, and everybody's benefited has benefited from that. ILUS shareholders, the QIND company, the subsidiary, the Shareholder gas team, HTOO shareholders as well. So I think all in all that was one play that we have very successfully executed, and now it's time really to reap those rewards, which we'll talk about later as the presentation goes on. So that was one thing. There was obviously a knock-on impact from the Quality International spin-out, and the past anti-business government that was in power at the time. We had issues with our Form 10 registration, and as a knock-on, a consequence probably with the auditor. And I say we had issues. That's probably an overstatement, but ultimately there are issues if we want to really not beat around the bush. Obviously, our Form 10, as you know, was filed 2-3 years ago, and we had round after round after round after round of comments, extreme unnecessary comments. Actually, a couple of attorneys said they'd never seen so many rounds of comments, and it wasn't actually a reflection of our business at all. It just was the way it was at the time. So of course we obviously kept filing amendments to those Form 10s, until it got to a point that they were required. The SEC was asking us for asking us to comment on subsequent events that were so outdated and weren't even relevant anymore. For example, I think there were some questions around the Quality International receivables, or the Quality International breakdown of their business, their products that are sold. But but we'd already unwound the transaction. So how could we comment on something that was already unwound and not relevant to our business? That was just one particular example. But there were a number of things that were just not possible to answer. So obviously SEC kind of stood up to me and also stood up to us. We had a little bit of a tuffle over it. And ultimately we answered what we could for as long as we could. But every time we file an amendment, these things cost, $20,000, $30,000 of legal fees. And a hell of a lot of management time, achieving absolutely nothing when we couldn't raise capital. So continue to deal with, I'm sorry, the kind of level of stupidity of some of those questions that were totally irrelevant. Just seemed to just go on too long. Anyway, cutting a long story short, SEC finally terminated that review, thankfully, after we had a number of discussions saying we would like to withdraw the Form 10 and file a new S1 registration or a new Form 10 that's actually relevant to the business, because the business over 2 years had changed considerably. We are now getting comments and questions on about a business that wasn't even relevant anymore, which obviously the SEC said we could not do because of the time that had lapsed, blah, blah, blah. Anyway, cutting a long story short, they obviously terminated that review, which now gives us a fresh start to file a new registration, which we're busy in the process of kind of getting our let's say ducks in a row to do that. Again, more on that topic later in this presentation. The kind of let's say entwined challenge was around the audits. We obviously changed auditors in mid-process for a number of reasons. We initially started with the previous auditor because it suited us. They were Indian firm, PCOAB registered. They were on our time zone, where our back office is in Dubai. So it made a lot of sense, considering a lot of our operations are also out of Dubai, and it made a lot of sense. However, water under the bridge, it probably wasn't the best idea for us. We perhaps didn't get the level of let's say not consultancy, because that's not what they're supposed to do, but the right level of service that really we really needed as a group, and that ultimately led to some knock-on effects where things were in our financial or in our disclosures, perhaps misworded. The footnotes were perhaps not structured in the right way. Nothing misleading, nothing incorrect, nothing dramatic, but not correctly formatted the way it should actually be. And obviously that led to more and more SEC comments saying this footnote is incorrect, or please expand more on this footnote, etc., etc. And it was just layer after layer after that. Anyway, that kind of went on for some time, which we finally decided, obviously, mutually with our auditor to terminate and move and find a new auditor, which we appointed in the US auditors. But beyond that, we were struggling to go much further than that at that particular time, because of the group structure. So obviously, if we think back, we had unwound the Quality International transaction and acquired Al-Shola Gas in QIND. So the first lot of consolidations had to be unwound off the financials reinstated, which we did. Then the new financials for Al-Shola Gas installed, and the new quarterly financials filed, reviewed. Obviously, the new auditor needed to go back 2 years and do the audit. However, there were a number of moving parts as that time went on, including, an S1 filed for an uplist, which obviously we withdrew at the time. We withdrew later. I'm talking within Quality Industrial, QIND. We withdrew that S1. We then went on later, to look at a number within QIND to look at a number of uplist opportunities or reverse merger opportunities. So all this time, there were multiple moving parts going on, which obviously made it extremely difficult to kind of get all those things, aligned. And simultaneously within the SAML subsidiary, which again ILUS consolidates. Bear in mind this is an ILUS presentation, which ILUS consolidates. SEC had some comments relating to SAML's prior time to us. So relating back to the time prior to us taking over, SEC had some comments around the way some transactions were accounted for. Again, nothing dodgy, but the way they were accounted for. So there has to be some reinstatements on those, and we filed an 8K to notify the market that technically you shouldn't rely on those financials, although there's nothing drastically changing. It's really a slight moving around on the page rather than as opposed to something drastic. However, obviously the rules are the rules, and we continue to follow that. So again, ILUS consolidates at the top level. And again, all this is public. It's all been filed in 8Ks and PRs, etc., at the appropriate times. But obviously, at the parent level, we obviously struggle to consolidate a SAML SAML disclosure and a QIND disclosure when they have their own moving parts around, which has made it extremely difficult at the top level. And obviously, auditing is not a cheap event, as many of you will know, especially on a complex business like ILUS, where there's so many subsidiaries. So it didn't make sense for ILUS to lay out, when it was difficult to raise money, and every time we raised money, it cost our shareholders millions and billions of shares. It didn't make sense to rush forward to get an audit done, knowing we may very well have to redo some of it as SAML or QIND fix some of their disclosure stuff. So that's really just to answer the question. Obviously, we had a million comments on why our financials and disclosures haven't been done. That's the reason. Nothing sinister, nothing dramatic, nothing drama-filled, no problems. It really is just the kind of the technicality of getting these things done in a sequenced order and laying out the stall properly to get it done properly. Which we obviously have the US auditors that are working on things now, on the whole group. QIND, obviously, as you saw, we obviously sold that to HTOO. However, they got through all their disclosures perfectly now. They're one perfectly done. And now, obviously, SAML, we're very close to having that finished. And then ILUS will be able to wrap up their stuff. Then we'll be on great standing going forward. Later in this presentation, I'll talk a little bit about the BDC, our business development company /fund, and some of the new skills and expertise we will be bringing into that, which again will help benefit the overall ILUS group in general, and in terms of the whole ILUS ability to do our reporting and financials quicker and more effectively. So I think that probably covers that. So to summarize, we can expect the audited financials and all the updated disclosures. I think we're still going to be, probably a month to 2 months out without leading the market on. There's obviously been a lot to do and a lot to get through, and the auditors obviously needed, because they took over, they needed to do a 2-year audit. They're not just auditing the recent 24 year. They've got to go back to 22 and 23 and then do a 24 audit, because they've got to have the 2 years prior. So that's really, it's kind of a 2.5, almost 3-year review, 3-year audit. It's no small job, and obviously in that process, there's been a lot of transactions and a lot of deals done, a lot of mergers, a lot of acquisitions, and all the subsidiary levels, etc. So everybody's busy with it. We're working hard, very, very hard on it. As I say, there's nothing sinister, nothing dramatic. It is really just a process, and we're working very, very hard. We would hope that we are in line with the next quarterly filing that's filed. By that point, we are hoping that we are 100% up to date on absolutely everything, all the subsidiaries, and we're singing you off a sweet, clean hymn sheet. And we are in talks with SEC regularly about it. SEC are updated with it. We have to keep them updated in writing. We also hired a new specialist law firm who are specialists with these type of things, to guide us with the disclosures, so we don't make schoolboy errors, if we want to call it that. Which again was part of our challenges were some of the things we try to avoid, laying out money for legal expenses, for disclosures and stuff like that, because we just didn't have the access to capital. And rightly or wrongly, maybe that's why we survived and others didn't. But ultimately, that did cost us because, we obviously often had comments on things in the disclosures, which lawyers would have, fixed the wording or changed the way it was presented, or kind of, put in the right, terminology up front. And we obviously try to do that ourselves by saving lawyers' fees, which are obviously very, very, significant. However, nothing we were doing was illegal or against the law. It was, it was a management decision that we felt was best practice at the time, based on the resource that was available. And would we do it again like that? Yes, we had no choice. So I'm not disappointed in the way we did it. I'm disappointed in the overall circumstance of the market, that we weren't able to get capital and do things the way we would have liked to and do them properly. But ultimately, we've got this, and now we've, as we say, it's mega. Let's make ILUS great again. We're on a good standing going forward, and there we are. On the board, we'll talk about the board members a little bit later in the presentation, but just to touch on it at this point, there obviously will be a bit of a reshuffle around of the board as time goes on. Now, again, as I mentioned, this BDC fund, there'll be some new skills on board for that. JP has obviously moved from SAML to CEO of HTOO, which is obviously fantastic for him and fantastic for our ILUS shareholders too. Bear in mind that we have a significant shareholding in HTOO, so that will allow JP to really progress his career too, and also progress that company, because QIND and Al Shola Gas have phenomenal potential, which ultimately benefits us as the largest shareholder of HTOO. So we wish JP well on that. However, don't be disheartened. JP's still well within our arms, if you want to call it that. We still JP's still on the end of the phone if we need him. He's still available to help us whenever we need. He's obviously just not in an official title and can't be in an official title. He's 24/7 consumed by the HTOO business and getting that to sing off the hymn sheet that we want to sing off. But he's certainly within our realm, and he would have been at the shareholder meeting to give you a short brief on the HTO business. I'm sure you guys will meet him at the next shareholder meeting when we have it in November time, for those for a catch up. So that's that, and we're looking for a new CEO for SAML. To fill JP's shoes. I'm carrying that role interim, but obviously we're looking for somebody for that. But that's really let's say at the top company level. And now if we kind of go down one level, we've got to get into kind of the overall marketing. We've hired a new marketing director, or a new marketing manager, who's going to be promoted to director soon. And we're going to you'll start to see much more activity in terms of the ILUS brand and the ILUS marketing again. And again, coming back to the last 2 years, really picking up where we left off 2 years ago. Obviously, all these things cost a hell of a lot of money. And when we were spending a hell of a lot of money that we couldn't raise for absolutely zero gain in the short term, is all it was. It was just a drain on you ultimately, because we have to issue shares, dilution, to spend money for nothing back, if you know what I mean. So now we're basically able to, we've got a strong cash flow now, and we're able to now basically expedite all our plans that we told you 2 years ago. So there'll be more around the marketing and the marketing plan and kind of the branding, and I'm sure Sammy will give you probably her own little podcast or her own presentation in due course, once she's at the moment she's busy basically revamping every website in the group. And again, as we talk about subsidiaries, some of that will be clear to you in terms of the reorganizing and consolidating some of the assets. So that's really marketing. Summarizing, you can see a lot of activity coming from marketing over the next 6 months, both in terms of the ILUS brand as well as the subsidiaries, as well as the products. I know so many of your shareholders, you invested in the businesses for the products and kind of the sales that come from that, and the outcome of what those products, especially the Firebug and the ILUS and the water mist, life-saving appliances, and you want to see more of it. You want to see more action shots. You want to see more of what's actually going on, and we're dedicated to bring that to you. So we've got to give Sammy a little bit of breathing time to kind of get on top of all the websites, the branding, and kind of all the social media aspects. With again, we're trying to do this very cautiously and not while we've now got a strong cash flow, we don't want to obviously waste it unnecessarily. We've got to do things step by step and gradually as we grow as a stable business. So that's really that. We've covered the audits and all that stuff already. We've covered the board, and we're going to go into the subs, the subsidiary businesses in quite some detail in a little while. Another formality which has been obviously around for a while is the name change. We obviously had some issues with our name change previously for 2 reasons. One was because FINRA, who are a self-imposed regulator, if they want to call themselves that, FINRA had an issue with us having diagonal lending in the business. We had some borrowings from them, and they had some SEC issues in their past lives. So FINRA had an issue with that, which we obviously challenged and contested, but it was a losing battle. They basically saw them as a bad actor, so they wouldn't let us change the name, and while that those people were in the business. And also our Form 10 comments were still outstanding, and FINRA had an issue with they wouldn't change our name till our Form 10 comments were cleared. Obviously, or not obviously for you guys, again, more will come later, but Diagonal is now cleared and paid off, and no longer in the business, so we don't have that issue, and we'll be able to change the name once we file. I'm assuming once we file a new registration and we've cleared comments, we will be able to basically file for a name change. So we still hold the name on reserve, and have upheld that reserve continually, and ultimately, sooner or later, over my dead body, we will still change the name to ILUS International fully, as opposed to this Illustrator Pictures. So that's obviously there's been a lot of change, globally in the market in terms of, let's say macroeconomics, a new change of government, pro-business government. We've obviously got this tariff story going on, which while it has on one side of the coin has big issues and big challenges, on the other side of the coin it has massive opportunities, huge opportunities, especially us as a manufacturer that is busy setting up manufacturing bases. This gives us the opportunity to be able to actually set up manufacturing from the outset in the US, as opposed to bringing in products and paying tariffs. So, I'm not disheartened by any of it. I think it's all very helpful to us, because of our circumstances. Obviously, we've got geopolitical challenges around the world with Russia, Ukraine, now Iran, Israel. And again, while that poses some challenges, it also poses a lot of opportunities. So we're well aware of that. But I think that one of the biggest changes over the last 2 years that we really need to embrace and adopt. And, as now we have more access to capital, we'll be able to adopt this across our entire group in a more aggressive way, is kind of the AI digitalization mode. There's a lot of functions in the businesses that can be automated and truly have real AI implemented into them and digitized and even tokenized. The crypto market has obviously come back considerably. And obviously the current government is very pro the crypto. And I think there's a little bit more of a pathway now to regulation on how that may actually work and how that may actually look. I mean, I think some of the biggest NASDAQ deals this year have all been crypto related. So, we're mindful of that. And again, we had done a lot of work on that prior, right? With our ILUS coin. Obviously, our ILUS coin wasn't a success. However, we've obviously maintained it. We've maintained the coding behind it. We've maintained the platform. While we've dropped off some of the exchanges, those can be reinstigated pretty quickly. But I think the world has moved on, from the woke times that we had through Biden's administration, to much more a pro-business focused, get things done type of attitude, and on that basis, I think there actually paves a good way for the ILUS coin, and we've been exploring and discussing with a number of lawyers about how we'd actually register that as a security, if we need to, or tokenize it. But ultimately, at the end, completely revamp our white paper. Previously, it was sort of almost in a lease model. It was almost in a lease model into almost a charitable type of thing, where it was outside of the ILUS company at that time. It was a complete standalone, run by a different financing company, and they were, engaged back to us by providing us capital off the back of their sales as a preference share, which obviously they weren't able to actually sell many of the coins. I mean, there was a few 100,000 sold, maybe a couple of million sold. I don't remember exactly, but there was a fair amount sold, but not enough to be meaningful. And ultimately, we still want to deliver, what we need to deliver as a business, and to save lives. That's a very important part of our business, and always has been and always will be. So we're looking at different options of revamping that white paper into a much more commercial entity, and actually taking that in-house, because obviously now we've got a pro crypto government. So provided we do the necessary registrations and disclosures and whatever we need to do around crypto space, to make sure that's done appropriately, ILUS would have about 85 million ILUS coins, which it could gradually release into the market off a proper structured business play, and we're still working on that. So the white paper ultimately will be completely revamped, to a very pro-business, commercial type of business, and we don't exactly know what that looks like. We're exploring a number of opportunities, but the first thing is really the administrative registration period, that we need to kind of get the formalities set out properly, so we can actually capitalize and monetize those tokens for our shareholders, and ultimately to deliver cash to the business and to do what we need to set out to do. So that again is something new that's occurred over the last 2 years, which again brings us opportunity. So re-encapsulating what I've said, I think while it was a lost 2 years, the work that we did prior to the 2 years and the work that we've sort of ground out through the 2 years, has left us in very good standing. While we're standing with a lot of injuries, we've got a lot of good things in our stable now that we can really capitalize and maximize on. And the best summary of the whole lot is being able to maximize on all these opportunities and all these assets that we have without needing the necessary to borrow money, which we'll come to in a little bit later. We now have the strong cash flow and are actually able to grow all these businesses out of our own cash without needing to borrow, and just pay down debt as we go. So I think all in all, we're in a good standing, and let's make ILUS great again. So I think we've got a number of highlights, and challenges that we've encountered over the last 2 years. I'm not going to go into all of them because we'll literally be here all week. But let's, to focus on the big ones, kind of the main headings that then trickle down through the rest of the business. Firstly is the debt load. That has been dramatically reduced, primarily by the sale of QIND. Obviously, we a lot of those liabilities or associated liabilities have moved off our balance sheet. So that's obviously left us, in a much better position. At the same time, that those liabilities obviously got converted into valuable stock. So what was once a debt will now sit on our balance sheet as a significant asset. So that's no small feat for our shareholders. And I think you'd be appreciative of that when you see the balance sheet. And again, as I explained a little bit later on about the HTOO transaction. The second thing is we've removed or paid down or converted out a lot of I don't want to call them subprime, but let's say other lenders, the less desirable lenders, or the sort of the more aggressive lenders in the market that we're obviously forced to take money from because we had no choice. So Jeffrey Street is gone, for example. Diagonal is gone. And by the way, guys, if you two are listening, it's not we're very grateful to you, as I've said a number of times in this presentation. Most businesses wouldn't survive without you at some point in their journey. So I do thank you for that. As painful it is to us and our shareholders, you filled a gap that needed to be filled at the time, and we're grateful. But obviously, as time goes on now, we don't need to take on any more debt at all. We're just paying down debt now and reducing debt with a strong cash flow. But even if we did need to, we'd be able to get much better terms or much better quality money. So that filled the gap, but it's gone now. We've paid down Diagonal, or they converted, so a bit of both. They're gone. Jeffrey Street is gone. Discover, we obviously paid back all their capital. They've just got one interest payment remaining, about 500,000, something like that. That was obviously, we didn't pay that down out of cash flow. That was really refinanced with RB Capital. Obviously, as you know, with RB Capital, this was filed a year ago, 18 months ago, whatever. We obviously had a restructured note with them where we consolidated all RB Capital's smaller notes into one bigger note with a limited quarterly conversion, or up to a limited amount conversion, which seems to be working relatively well. And it is what it is. Again, nobody wants to convert. Nobody wants to have issue shares, especially at these prices. But it is what it is. We've received the money. We've used that money to buy assets and grow the business. And for that, obviously, the lenders need to be compensated. So there we are. There's no point in crying over spilt milk. It's just the reality of the situation. All of that is positive. As I said, we've got rid of some of the debt, got rid of some of the less less desirable debt holders, and we've converted a lot of the debt for a positive asset on our balance sheet. The downside of that is obviously it's left us with a very bloated, outstanding share table, cap table, extremely bloated, extremely heavy, which we have a plan on how to, reduce that and how to work on that, which we'll talk about later when we talk about the fund in a little while. But we're obviously aware of it, we're conscious of it, but it sort of falls more into sort of the macro plan and the macro strategy for ILUS as well, because obviously, I'll come to it in a while, but OTC in general is not, it's not a desirable place to be. It definitely wasn't in the last 2 years, and I don't see that really becoming desirable over the next foreseeable future. So we need to, think about how we go forward with the company on that note. So I'll come to that in a little while. The second point is, a high level, is subsidiaries. We've consolidated a bunch of the subsidiaries and kind of merged some of the operating companies together, which has created some efficiencies, certainly made us a lot leaner. And it's going to help considerably with the marketing, which was obviously very fragmented when we had multiple different brands that were quite messy, and some were doing this, some were doing that, but ultimately the same product, same team. So we've streamlined a lot of that, some of it by desire and some of it by necessity. So there'll be much more on that coming out when we talk about kind of the organization charts, in the next clip. But that's obviously been, ultimately beneficial long term, while it might not have felt it at the time. But the real benefit out of that is obviously we've got a number of subsidiaries that are, while they don't have enough critical mass yet So they're not ready for an uplist or ready for an IPO or ready for a sale to somebody like that we did with QIND. They're not at that stage yet. They're well positioned to grow into that stage. They've got a clear plan, they've got a clear strategy. While they took a hit through the tough period on revenue and operating profits, they're, let's say, well established for the next chapter. So we've now got a number of opportunities over the next, let's say, 18, 24 months, hopefully sooner, but let's say 18, 24 months, that we can do exactly what we've done with QIND with a number of our other subsidiaries. And now I just focus on the QIND subsidiary, which is obviously the one that we've proven now that, we know what we're doing and know how we're able to actually execute on it. Is that obviously we acquired the entity, rebranded it into QIND, acquired the acquisition, Shareholder Gas, help develop that business and grow that business and get it structured and in a way ready for greater things. And we then sold that QIND business to HTOO, a NASDAQ company, which you'll all be aware. It was an all-equity, all-stock sale, but ultimately the bottom line is it delivered between 11 and 13 million US dollars of shares of NASDAQ stock to our ILUS balance sheet. And NASDAQ stock is obviously liquid. The stock trades pretty well. And while we're not converting our $13 million of stock, it sits on our balance sheet. It is a liquid asset. We can collateralize against it. We could borrow against it. In some way, some form, we can monetize against it should we need to. And that's obviously a very significant. So while we sold the entity to HTOO and gained a significant amount of liquid NASDAQ liquid shares, valuable liquid shares, we also shifted a bunch of acquisition liabilities that were on our balance sheet at the same time. So that just demonstrates to the shareholders our overall strategy, what we pitched to you 2 years ago. That is a summarized micro version of exactly what we continue to do. So we are, if we want to call ourselves an incubator, we buy these companies, get some critical mass into them, roll up a bunch of them, get it into a size, get it into a shape, get it ready for either a sale or an uplist or an IPO or a reverse merger or whatever's appropriate for that particular business. Frustratingly, prior to the 2-year period, prior to this last, let's say, 18 months, 2 years of disaster zone, we had 2 or 3 businesses that were very close to being in that position. Obviously, we've gone back 5 steps or 10 steps, but we were able to execute one. Which is probably more than most companies were able to, of our size, obviously in our micro, nano cap, OTC, shitty space size. But what hopefully that demonstrates to the shareholders is that we are able to execute. We are able to do it. We're able to deliver on our plan. We have done it. It's not talk. It's not if. It's not gonna, wada, whoulda, shoulda. This is have done it, finished, done. Our shares all matured on the 28th, actually the 16th of May, 28th of May properly, because there was a period between the SPA and all the closing documents. So 28th of May, all of our stock is now fully mature under Rule 144. So that is no mean feat for an OTC company. And now we return back to our stable, look at the rest of our stable, utilize some of the cash from the HTOO transaction and the HTOO asset, monetize and collateralize against some of that stock. And now we grow all those other subsidiaries aggressively, like super aggressively. Now's the time. The next 3 years, what's the saying? Make hay while the sun shines. The next 3 years is that opportunity. We've got to take all of our subsidiaries, get them well branded, get them properly commercialized, get the products properly out there, expand the product portfolio, acquire a bunch of other companies into those groups, into those verticals to get some critical mass and look to sell them or uplist them. Exactly the same, just carbon copy of what we've done. So, I think that's a good demonstration to our shareholders of what we're capable of. While, a lot of other balls have dropped out, things have fallen through the net. There was one deliverable that we have done and done well, and it's significant. It's not a joke. Which immediately leads us on to the third topic, really, which is around the capital markets, public markets, NASDAQ/NYSE knowledge. I think those of you that followed us, from through this period, you would have seen and noticed, we had a number of deals that, were significantly difficult, a blend of a number of reasons. But ultimately, we've learned a lot, a hell of a lot. And we can certainly tell you what not to do and how not to do it, that's for sure. which while we laugh and joke about, is very significant because our business model is to carbon copy what we've done with QIND. As I just said, put more businesses in, roll them up, grow them up, sell them or uplist them. So the fact that we've got a significant amount of experience over the last 2 years doing exactly this and a bunch of failed deals, those of you in business will know you learn the most when you fail. That's your learning curve. When you succeed, it's easy when you succeed, but it's the ones that don't make it are the ones that really learnt and took away the life lessons. As we say in Britain, paid the school fees. So that is no insignificant feat for our ILUS board and our ILUS team. We know exactly how to execute now in terms of mergers and acquisitions, getting them done, getting them rolled up, getting them audited, getting them prepared with the governance that's needed for a sale and for an uplist. We know how to do the registrations. And we've built very, very strong relationships with a number of banks, a number of NASDAQ level attorneys, smallish, niche, boutique and large firms. So I believe we are extremely well placed to now execute a carbon copy of our strategy. Now it's really just about utilizing the cash we have generated, or leveraging the cash that we've generated or are able to generate, and going faster, executing some M&A, getting it done, getting the uplist done. So that is not, as I said previously, it's not insignificant. People say, and we too ourselves thought in the beginning, and stupidly we believed kind of that, let's say, the mass market and even some of the bankers and lawyers in the early days that we didn't have relationships with. It's easy. People splash around the word uplist, reverse merger, uplist. We're going to uplist to the big boards. It is damn difficult. I can tell you, it is damn difficult, as you've seen. Probably me more than most of the OTC companies over the last 2 years, because I've obviously had 2 deals, 2 sides running at once with the DRCR Swifty business as well as the ILUS side or QIND side. So I've had a heavy exposure to a number of different sort of strategies and execution plans and structures and you name it, different types of registrations, onshore, offshore, F3s, S3s, S1s, you name it. So we've certainly learnt a lot. And just summarizing, it's not easy. Any company that just splashes around and says we're going to get this done and we're going to uplist, I can tell you it's not easy. There's a reason why the majority of them don't do it or can't do it or fail. 1, it's not easy. 2, it's not easy. 3, it's not easy. And 4, it's extremely expensive, extremely expensive. And you actually have to have this knowledge to be able to think on your feet, because while you think you're paying lawyers to advise you through this, what we actually learned from everybody that we worked from, what you actually pay them is just to do the job that you tell them to do. That's really what it really boils down to. I don't mean that disrespectfully to any of them, but there's very little value added by any of them. They literally just do what you tell them to do. So if you don't know what you're doing, you're not going to get there. You're going to pay 3 times the money, fall over 5 times, and before you actually reach the goal. So I'm pleased to say we've done that. We've paid the school fees. We know how to do it, and now it's a carbon copy, and we absolutely intend on doing that rapidly, as fast as we can. And the businesses we're building, and the other subsidiaries, we're building that with that in mind. We kind of now able to look back from what we've learned and prepare ourselves going forward on how we will need to actually be by the time we get to those uplists, to those reverse merger, that sale opportunity. What do we need to look like? What does our cap table of that particular entity need to look like? What does our board need to look like? What's exciting for the shareholders, the lawyers, the banks, because they all have different interests in it. And it's not just about revenue, profit. There's multiple things. The new listing application for a NASDAQ is pretty complex, for example. There's different levels, whether you've hit the net income standard for the last few years, or whether a new company, whether you've got the big enough float. There's a number of things you need to look at. And again, I think we are at an interesting time with NASDAQ and OTC. I think, we've touched on it a little bit before. I think OTC is in a very, very difficult place. The liquidity is not there for anybody. I don't think there's many stocks that are having massive liquidity anymore like they used to. I just think that's gone. Of course, there's still some success stories, absolutely, of course. I'm generalizing, but the mass liquidity is gone. Whether that ever comes back, I'm doubtful. I don't know. I think that market is gone. It's moved on to the crypto space. It's gone full stop. And especially with the macro, economics and uncertainty in the world at the moment, I'm not sure there's that many people. And with the high inflation, that's taken a lot of people's disposable income. Maybe they would have had $500 or $1,000 or $2,000 free at the end of the month that they would have plonked into the OTC market. I think those days are gone. Everything's costing more: school fees, holidays, cars, fuel, food, etc. So I think think the OTC is in a very, very, very tough spot. I just don't see how they're going to recover. And secondly, because the liquidity, it's all hand in hand, right? So obviously when, under Biden's time, of course, SEC was, down on every funder. So the funding was gone and the liquidity was gone. So it made it absolutely impossible. Now we're at a stage now where the liquidity is gone and the funders would like to come back because the SEC is much more pro-business and much more pro the lenders getting money deployed to the markets. If the lenders deploy money to the markets, it creates jobs, it creates opportunities, it grows the economy, etc. But however, if there's no liquidity in the market, it's a chicken and egg. The lenders won't come if they can't get liquid. If they can't get their position covered, they're not going to bring the money. So that's really where we are. That the OTC, while the lenders are starting to show, early signs of interest to come back to OTC, there's just no liquidity to make it sensible for them. So I don't know where the OTC market goes, and it's a massive concern for me, because of where we are still for a period of time. But for certain, I don't see us staying there for the indefinite future as ILUS as the parent company. As I said a little bit earlier in the one of the last clips, it's important we get these audits done, get these disclosures done, get a registration filed, and get ourselves on into the game, if you want to call it. Then we've got the opportunity to decide, what do we actually do in terms of an uplist, in terms of the next play. So again, when we come to the fund, I'll talk a little bit more about that. But now moving on from OTC, I'm now going to move on to the NASDAQ side. Obviously, I'm sure you guys are all exposed, a lot of you dabble on the NASDAQ side too. They're obviously also having their own challenges, because when the OTC was dying in the last 2 or 3 years, every company rushed to do an uplist. Of course, the investment banks are happy to do an uplist. They don't care if you're selling shoelaces or nuclear missiles. If they're going to make a fee, they'll help you get up. And if investors are going to buy the shares, they'll help you get up. And that's ultimately what happened. So tons of companies went up and couldn't sustain it. They didn't have the revenue. They didn't have the cash flow. They weren't able to take the money. And a lot of them, including ones that we worked with, to do reverse mergers, took the money and blew it. Absolutely blew it. There were ex-SPAC deals, took 75 million, gone, nothing to show for it. Took 25 million next round, gone, nothing to show for it. So obviously those shareholders are all left holding a bag, but it's a real bag. There's literally nothing there. And there's tons of those NASDAQ companies. If you look on NASDAQ websites and you look at kind of the lowest market caps, I don't know how many, but there's a ton of companies on NASDAQ with less market cap than $1 million. What happens to those firms? Now, obviously, NASDAQ has to do something, but of course, they don't want to delist hundreds of firms. It's not beneficial to the shareholders, but they can't leave them on there. These guys can't raise money to get out of the hole, so they stuck. Their share price goes below $1. They do one reverse. They can't do another reverse, so eventually they're going to get delisted, or somebody's going to reverse merge with them, or take them over, or let them buy an asset with stock. So that is going to be a massive opportunity for, I see it as a massive opportunity. I don't understand yet how we're going to embrace that, for all our ILUS companies, but I'm well aware that it's an opportunity and I don't want us to miss out on it. So, I'm trying to strategize on how we can maximize, capture those opportunities while they're there. And again, when we talk about the fund, there'll be a little bit of an overlap on that. But ultimately, I think we've learned a lot. We understand a lot. We've got the right contacts now, and we'll be able to execute, whether we're selling, reverse merging, taking over, change of control, whatever it is, and we'll be able to navigate our way from OTC to NASDAQ should we need to, etc. So, that was kind of our next review topic, which I think we've done well, which you can't buy. It's not something you can just buy, and it's something that only time and experience gains. The next thing really is, a little bit more of a difficult one for us, and a bit of a more painful one is our revenue and distribution. Obviously, our distribution businesses, like Georgia Fire and Rescue, for example, we've had a lot of pain, through those last 2 years because we couldn't raise capital, and they're cash-intensive businesses. So, they needed capital to buy more inventory to continue to grow the business. As soon as they buy more inventory, they then sell more inventory, they get paid after 60 days, so they then have a bigger receivable. So it's this continual, the more you grow, the more cash you need. And obviously, when we couldn't raise cash, we were in a dire position. So we lost a lot of our distributing products. So we had contracts with a number of products that we were agents for. We would take their product and distribute it on a regional basis. We lost several of those because we just couldn't maintain our payment to the suppliers on time. While I have a view on that, it is what it is. So we've got to obtain some new distribution agreements. But at the same time, simultaneously, I think it creates a great opportunity because some of those products are not relevant going into the future. With some of the new world that we're looking at, some of those products are no longer relevant, and there's way better products that we could gain. And some of those products, the distribution agreements didn't allow us to take on other competing products that were way more advanced. So, our job now is to go to the market and convince those people that those manufacturers that we want to distribute their product, and we're the best party to distribute their product. So that's a really important thing for us, and it's not going to be an easy job. But obviously, cash talks at the end of the day, and the fact that we'll have capital to be able to deploy and buy stuff in advance and buy bulk quantities, I think will help. But we also learned that we don't necessarily want to be heavily exposed in too much distribution-orientated business because they consume too much cash. We want to try and make sure we're managing cash flow positive distribution. Even if you're a profitable business, you're still consuming cash. So we need to make sure that our margins are right. So we're really not chewing cash while we're growing, because that's very important for our next stage when we uplist or we'll sell these businesses, that we are cash positive. That certainly increases the valuation, we've learned, not just the profitability, but in terms of the cash positive. Companies don't want to acquire you or do a reverse merger, and then you need tons of cash immediately to grow. Maybe when the liquid times come back in future, like it used to be, people didn't care. They're ready to pump in $50 million, but the way the market is now, and I think for the next 2 years, it'll be, they want to take over a good quality business and raise money gradually as the business proves itself, like is happening with QIND and HTOO. So I think that's the challenges that we had around the distribution business. On the positives, it allows us, let's say, to refocus on new products that are more relevant to the market, more appropriate to the market. And there's a bunch of new challenges in the market, such as lithium. There's more data centers being built. That they have their own fire risk. There's a ton of new things that weren't around 2 years ago. So it allows us to focus on that. And we have a lot of products in our own net stable that we need to finish off developing, that we pulled the plug on. Put them on ice, such as our commercial kitchen system. We just couldn't afford to pay for the certification. And if we did finish paying for the certification, we wouldn't be able to pay for the stock and the inventory and the marketing to distribute it anyway while the market was in such bad shape. So now all those products come out, we dust them off, and a lot of those were already 5 years ahead of their time. So, we're now, in a real good shape to kind of get those going. And I fully acknowledge we've got to work bloody hard on it, and it's not going to be instant. Next month we're getting results. We've basically said it's the last 2 years. We're more or less starting now where we left off at the end of 2022. And that's just the reality of it. But the good situation is now we're able to do that without debt. We're not running around the market trying to raise money to get our kitchen system finished. We physically have the assets there to be able to leverage to do that comfortably. So, that's, and then I think the other positive side out of the distribution challenges is it's forced us to be leaner. Obviously, disappointingly, we lost a bunch of staff. We just couldn't maintain the payroll. And sadly, we would have obviously liked to have kept a lot of them and a lot of their skills and the contacts that they've got and the networks they've got. But the reality is, it is what it is. We had to let them go and couldn't afford to maintain them, and that's just the reality. So while we, on one hand, lost people, valuable skills, and people would never want to lose. On the other side, it gives us an opportunity to bring in fresh blood that is much more relevant with this generation, with all the modern things that are going on, digitalization, AIs, I keep mentioning the same words because most businesses have got the opportunity to take this on. So let's not see the doom and gloom. Let's really look at the positive of now we've got an opportunity to build a fresh team and be very pro and grow rapidly. And that's also forced us, because of the lack of access to capital, it's forced us to be lean and actually work out exactly how far we can go without money, and how lean we can be and what we can actually do on a shoestring, as opposed to, having the money available. When you've got the money available, you do it because you've got the money. But when you don't have the money, you have to think, well, we still have to do it. So how do we do it without the money? And definitely without the money is not the best option, but also with all the money is also not the best option. It's somewhere in the middle. So I think we've learned that again. It's a skill game that we've got, through this period. And then I think the last thing is the adaptation of this modern world. I've touched on it a bunch of times, so I'll wrap up quickly on it. But it really is a different world. It's a very different world now to what it was just 2 years ago. And now we need to make sure that we're positioning ourselves right for that future. We don't want to be lumbered with old ways of doing business, old products, old staff. I don't mean age, but I mean old ways of thinking staff. We've got the opportunity now with a white sheet of paper, but a fantastic base, to really just bring in additional new products, plus finish off our products, and really pump forward and build a good team. So I think that summarizes kind of the, let's say opportunities and the review that we've had over the last 2 years at the high level. I'm sure when we get together in November, we'll be able to dig into much more detail. But, those of you that know me know that I'm not a person to look back at the past and cry over it. You only win by being good in the future, not by your last game. So we now need to take away with what we've learned, look at it, which we've done. We've looked deeply, we've looked in the mirror, and we know exactly what we need to do and how we're going to do it, and we've got a plan. Now it's about executing it. Let's not cry over the spilt milk. Let's go forward and get this done. So we've had a number of changes to the organizational structure. Not fundamental, not material changes. That's why they haven't been announced. These have kind of been massages and sort of, within a working consolidations and efficiency improvements. So you'll see on the screen shortly basically what our going forward plan looks like. So obviously we have ILUS International as the parent, and then underneath that we have what we were originally proposed to call ERT. As you know, FINRA denied the name change again because of diagonal lending. So we've got the opportunity to modify that going forward. So we will have ILUS Industries will be the name. So SAML will change to ILUS Industries. And that's really going to hold all of our industrial businesses now and going forward. And that's a vertical that we want to focus on quite considerably. I'm going to jump back to a topic so you sort of understand where we're coming with the structure. We had, and again, earlier on in one of the last clips, I discussed the Form 10 and some of the comments that we had. Some of the let's say comments around our business structure was that the regulators felt that we should be classed as a BDC, a business development company. For those of you that's not aware, ask ChatGPT or Google it. So a business development company is basically a fund in very broad terms. And it's designed to kind of invest in a bunch of different businesses in any vertical sectors, like a fund would, whatever you disclose to your investors. We obviously, adamantly argued that we were not, a BDC, because ultimately we acquired always the controlling position and we operated the companies. We physically operated them, i.e., so they were our companies. We weren't an investor in the company. We actually controlled the companies. And therefore we were more a conglomerate than a BDC. And arguably we always kind of pushed backwards and forwards, left and right. And, I don't think either party was wrong. I think it could have been argued either point at that particular time, BDC or not a BDC. However, going forward, one of the tests around that topic is sort of the nature of your businesses. And obviously we have such a diverse portfolio of companies, literally we've got shares in a gambling company, as you know, Swifty. We've got shares in a NASDAQ energy company, firefighting company, recycling, you name it. So we've got a kind of a mass, range. And some of those are not complementary to each other. And on that basis, we may fail the test going forward as we grow those businesses and start to do something with them. So we obviously are mindful of that and do not want to run into trouble. And we do not want to have our registrations going forward affected. And we don't want to have comments in future on registrations that we think you're a BDC. So we're dealing with that. We're facing it head on and getting it solved. Hence the reason for this structure. So we the sort of broad terms, and don't quote me on this, I'm not a lawyer, but sort of the broad terms of it is, if you're acquiring businesses in the same vertical and they're complementary of each other and you're actually acquiring them to help another business in the company grow, cross-pollination, staff sharing, increase of revenues, you're buying them for a strategic reason as opposed to buying them as an investment, then we're okay. If we're buying them purely on a speculative basis, we're buying it hoping to just grow it quickly and flip it or sell it or uplist it, then we become a BDC or a fund or an investment company, which we're obviously not. So it's a very fine line between where we sit, and we're very mindful of that. So hence, coming back to this ILUS Industries, all of our industrial businesses that are quite complementary of each other will be under this vertical, and we will continue to acquire more companies in that vertical that are complementary. Because ultimately what we're trying to do is we're trying to grow a big industrial holding business as a subsidiary and eventually sell that or uplist it. So right now it's not necessarily a short-term investment. We're growing a company. So hence the ILUS Industries company. And ILUS and Sammy, our new marketing manager / director coming in, will, start to market this a lot. You'll start to see the brand a lot. It'll start to have its own identity in preparation of what I said earlier. We know what the market wants, in terms of capital markets for an uplist or a sale later. So we'll start to sort of get that branding and get that ready for, something along those lines in the future. Underneath ILUS Industries, if you're looking at the organogram, obviously, I'm interim CEO. We're looking for a CEO quite aggressively. We've had a bunch of interviews, haven't found the right person yet. Because we're across a diverse range of territories and geolocations, i.e. US, Eastern Europe, Middle East, etc. We need to find a person that's got kind of that vast knowledge, and we need to find somebody who actually really can do the job. In the capital markets, you've got CEOs that are pen pushers in public market, arse sniffers, that can really stand up and tell a story but can't actually do the job. And then you've got CEOs that really can do the job but have no public market knowledge. So we're trying to find that skills of somebody who can do both. We were very fortunate that JP could always do both. He was very good at the capital market side and the story, but also very good at executing and getting shit done. So we've got to find that right person. We can't afford two people to do that job. So I'm searching. We haven't found the right person yet, but I'm hoping to soon. So in the meantime, I'm carrying that stick. JP's obviously moved on to H2O, which we'll talk about in a while. So then basically below ILUS Industries, we have E-Raptor, which I'll talk about in a separate minute, and ERT. Those are all complementary because E-Raptor manufactures EV vehicles that will be supplied and are supplied into the ERT business, and can also develop further firefighting vehicles and expertise chassis that we need in the ERT business, and vice versa. The ERT business has a lot of some specialist skills and technology around pumps and different things that could be used in the E-Raptor business. So they are very complementary, and we would hope to be able to acquire a bunch of other businesses sort of around that space, and primarily under the ERT business are really around wildfire. But I'll talk to that in a while. The next business under our umbrella is and it's not under it's not, let me correct that, it's not under our umbrella because we don't own it. It's not a subsidiary. Is the Green Fusion Fuels HTOO business. We're the largest shareholder in that business, currently by a reasonable way, but we don't consolidate their revenues, and they're not a subsidiary of ours in any way. They are completely freestanding. We just have a large share position. So that, just to be clear on that, and then obviously under HTOO is obviously our old QIND business, which we sold, and Alshorla Gas under that. So we don't consolidate the H2O business, just to recap on that. In the last clip, I was talking about, one of the downsides of our distribution channels and the challenge we had, obviously, selling QIND, we obviously don't consolidate their revenue anymore, which will obviously have a dramatic impact on our profit and loss going forward. But on the other hand, we also lose all the costs associated with it. So we're probably in a neutral position, but gain the balance sheet benefit. So that's that. The third one, again, is not a subsidiary, but it's an investment, is obviously our Swifty position. We obviously hold 10 million shares in DRCR, the public company, which is is an online gaming technology company. So moving on. Now, this next one is a really important one for us. It's one that we've had in our stable for a long time. We've moved that out into a separate subsidiary because we believe we can grow this business considerably. And as you know, we need to have a pipeline of businesses that are growing for uplist and sale and, just growing that mass. And obviously, ILUS Industries will probably be, at some point, will be sold or uplisted. We're working very hard on that, as I've mentioned. But once that one's moved, we don't want an empty stable, and these things take a while to develop. So Replay Technologies is a completely undervalued asset. It's unfortunately an asset that was caught at the back of our tailwind. We started to get that going as the market basically crapped itself, and we just couldn't raise money to actually give it the money it needed. Our machinery is ready to go. Thankfully, we managed to convince the supplier that not to sell the machineries that they'd made. We'd paid half, and we had to pay the final payment that we just couldn't pay. But it wasn't even about paying half the machinery. It was, we then needed to execute the factories and the staff and the raw materials and kind of everything. And there's just no way we could have done it. So we kind of managed to put it on ice and protect our position. And keep everybody sweet, keep everybody warm. All the government regulators in Serbia and Egypt We've done a lot of work over the last 2 years in Egypt to look at having a e-waste recycling center there. That market is obviously ginormous, hundreds of millions of people there, a ton of e-waste, and an undercapped market where there isn't really anybody playing in that space. So we've done a lot of groundwork behind the scenes. We just didn't do anything that cost us money, if that makes sense. And now we're able to actually really capitalize on that business and just drive it forward. The story around that business is phenomenal. I'll talk about it in a while. And under Replay, so again, we've grouped Replay Technologies as the parent of that subsidiary. We've got a CEO, which we will introduce to the market in due course. So Replay Technologies, by the way, it's a wholly owned subsidiary. It's not an OTC company. It's a private company just owned by ILUS, 100% owned by ILUS. So there was no need for us to 8K or announce formally, of the CEO's appointment. However, we will be announcing that in a little while. And Crawford McLeod, who we call him Sticks, that's his nickname. He's at the backstage of his career, to say that. With respect, Sticks, don't laugh at me for saying that. He's had his whole career in the mining and mineral sector globally, running billion dollar divisions of mining entities, listed mining entities, public entities. So he's well versed in the metals and minerals and energy department. And he was fortunate enough we were fortunate enough to be able to convince him to join us and buy into our long-term vision. So he's running the Replay business, and now basically starting to execute our entire business plan. So that's obviously really great for us. We've got a really credible person, and that always takes a lot of weight off my shoulders that he's able to actually get on and run it. As I spoke about a little bit before, you've got public market CEOs and CEOs are doers. Sticks is a doer. He's there. Obviously, we know that Replay is not a public company; it's a subsidiary. So he's totally focused on executing the business plan. So I think at this point, you guys will have very limited, if anything, to do with him. But obviously, as we start to get this more commercialized and ready for the next stage, we'll start to bring him more into the limelight. But anyway, that's just to let you know about that. Then we've got under Replay Technologies, and we call it that because during those 2 years, we've developed a bunch of technology. Ways of extracting the metals more efficiently and more cost effectively, and especially on a micro basis where we can actually have mini satellite stages, which is really for our next stage into the US market next year, which we'll talk about. So Replay e-waste falls under Replay Technologies, and then we're looking at an oil and water recycling center here. Again, it goes hand in hand. We talk about this BDC, business development company. It goes hand in hand. It's not an investment that we're buying to flip. It's an investment that we're buying to actually develop it and grow it. We see a massive potential, especially in the Middle Eastern region where we have a major shortage of water, and we have a ton of waste oil. And again, just like our Replay business, hence the name Replay, we're focusing on waste oil, whether it's cooking oil, mineral oil, whatever type of oil sludge, marine sludge, out of the vessels, industrial oil waste, etc. And basically developing technologies around reprocessing that and refining it, blending it and turning it into different lubricants, industrial oil for running turbines, running generators, etc. We're looking at a number of facilities, which I'll talk about in a while. But that's the Replay vertical. Then we come on to the new one, which at this point it's in a dotted line and a red dotted line because we're not sure if it's going to be a subsidiary of ILUS yet, or if it's going to stand outside of ILUS completely, but ILUS shareholders being the founding shareholders. So this is what we're going to call ILUV Capital. So we've tried to keep with the ILUS theme, and essentially this is a BDC. So this is a business development company. It will IPO immediately. So we will be doing a large fundraise, 100 million plus. We've brought in a very credible board onto that. We just can't name them right now until we actually file the S1. But basically, they all fund experts. I will be chairman of the fund, but I will not be the CEO. The CEO has built a number of funds, listed a number of banks, run a number of family offices for billion-dollar families, highly credible people. Basically, the entire board of fund experts. But the idea behind the fund it will allow us to execute, let's say as a broader ILUS group, it will allow us to execute on some of the deals that we would like to do, but we cannot do it within ILUS, because if we did it within ILUS, we would have to be a BDC, and we're not a BDC, and it will be too difficult to turn ILUS into a BDC for a number of regulatory reasons, and also if we did turn ILUS into a BDC, we wouldn't be able to do what we do. And let me define the differentiation as a BDC is typically investing, mostly lending, but it's investing in businesses that are fast growing, mostly US based, big percentage has to be US based. I think it's about 70% has to be US based. And it's investing for growth, mostly on debt instruments, like a fund, which is great at the second stage, let's say Series A or, beyond, into a business. However, we are buying little businesses that are almost uninvestable for a fund. If a fund, if somebody replay size goes to the fund, they're going to laugh at them. No, who's going to lend them money? Nobody yet. So on that basis, they have to be incubated and grown up, and that's where ILUS fits in. Exactly as we always pitched to you, that it's the incubators, the mini conglomerate, it's kind of the development business. We acquire these businesses, roll them up, grow them, then flip them over to the fund, or the fund finances some of the growth once they're at a certain stage that makes sense. But at the meantime, that fund has its own mandate to go out and find businesses and invest and acquire businesses and grow them. But ILUS shareholders will benefit from it significantly. So what I mean by we're not sure if ILUS as a company will own a portion of the fund, which ultimately will dividend back to the fund, back to ILUS, and we'll use that money probably for a share buyback, probably, don't quote me on that, or whether it will be completely standalone, nothing to do with ILUS, but all the ILUS shareholders will be shareholders in it. Something like that. We're still working it through. It's a very complex structure. There's a lot of tax implications and a bunch of implications, and while we've worked on it a lot over the last 2 years and built the financial models and built the team, the board, the branding, all that stuff's almost ready to go. We didn't have the money to really execute on professionals and lawyers and all that stuff that we needed to kind of do the IPO on it. Obviously now, after 28th of May, that's now changed, and we now rapidly have access to capital to be able to execute on that plan. And that's going to be instrumental for the ILUS business and the ILUS shareholders. While I can't give you the full picture right now, I'm sure you've got the gist of it. So that's really kind of how the structure looks going forward. So SAML, what will become ILUS Industries. We've taken on a new factory, which we're actually presently moving into this week and next week, which really will be the Georgia factory moved in, plus the Bullhead factory moved in, and basically all consolidated together. Bullhead and will be rebranded under the TVC business, the TVC brand, which we obviously got in the Middle East. So that's one major strategy that we're working on, which will again allow us to be more efficient, because obviously we were spending a fortune on double premises. Both the facilities couldn't grow. Both of them were in strange locations that we couldn't access good capital, good people. So we've now taken this new factory, which will be a significant growth potential for us. Just coming back to some of the regulatory issues on SAML, not issues, some of the regulatory things. The SEC filings are all underway. As I said, the audits are underway. So as soon as possible, those will be filed, and they will be ready for the next chapter, really to go aggressively. And with all the legacy baggage gone, all the refilings that we needed to do prior to our time that the SEC wanted us to do, all being underway. So we'll be in a really, really good standing, for a potential uplist or potential sale or something at some point in the future. Really with a nice clean sheet. We've got the opportunity now with a new CEO to come in with a fresh strategic approach. As I mentioned previously, new technologies, new ideas. And to build out a new, fresh, motivated team. Again, with respect to the rest of the old teams, some of the old guys had been there 20 years and kind of were ready for a move on anyway. So we're seeing the positive side and trying to be excited by the new team opportunity. Again, there'll be a name change, so this will be called ILUS Industries, which I've already touched on, which really sort of strategically positions us, slightly different. And then we've obviously got a lot of products that are R&D has already been completed or in R&D, which we obviously stopped during the inability to raise money. So I think we're going to be in really good shape. And obviously the acquisition sides, as we acquire businesses, we're going to gain new products and have new routes to new markets, and basically be able to grow this business really aggressively. I think the future for this business is really strong. And it should be able to grow really quickly, because it's not coming from a zero base. It's already in a strong position. I know Sammy's working very hard on getting some of the marketing ready and getting it prepared for the next chapter. So if I'll drill down into the two businesses, very high level, E-Raptor. Obviously, E-Raptor is our small, specifically purposed industrial EV. We initially developed it for the fire and rescue market, but as we pitched, I think 2 years ago at one of the shareholder meetings or one of the get-togethers, was our plan was really to commercialize this vehicle to be able to move to the main market. When I say main market, I'm not talking about selling this thing to drive on the roads. We're not competing with Tesla. Be very clear on that. This is an industrial EV which has a specific purpose. It's for airports, it's for shopping centers, distribution centers, harbors, seaports, train stations, places where they need to move around quick. They need to move indoors, but it's something more than a golf cart, because they either need to carry weight, they need to carry more people, they need to move through a rough, rugged terrain, such as, let's say through a car park, they've got curbs they need to go over, etc. On an airport, they might need to go around perimeter fencing. It's sort of something unique. Those exist currently. Polaris have them, but they don't have an EV, by my understanding. I haven't seen one recently. I think we're the only ones in the market that will have a six-wheeler EV. Now, we developed it previously based off a Chinese chassis with a lot of Chinese technologies and some Italian battery technology. It was still very industrial, rudimentary. It was very basic. It was developed for what we needed it for in the fire and rescue market. We obviously had spent a lot of money on R&D in 21 and early 22 to develop this now to a commercial vehicle. A sexy vehicle that you would actually walk into a UTV distributor or an ATV distributor and see it on the shelf and go, wow, that thing looks cool, I'll buy that. I need it for my farm, or I need it for my factory or whatever. So that was sort of where we were trying to go with it, and we did all that R&D. I say all of it. All the desktop R&D is done. Drawings, calculations, technical manuals, manufacturing drawings, everything is done. We had a whole team working on that for months and months and months, probably a year. Then we got to the point of now ready to make the first prototype, and obviously hit the snag because we couldn't raise capital. The market shut itself around us. So we put it on ice, put it on the bed, in the cupboard, and now we're returning back to that. And we would expect, it's not fundamentally different to what we already had. It's just sexed up, a little bit more technology, a little bit more modernized. So we would hope that we've got the first prototypes out kind of into late Q4 and ready to commercialize that heavily in 2025. Now, we don't know the automotive business. It's not our business, but certainly logic would tell us, and desktop calculation would tell us, that this thing has potential to be its own business, its own uplist at some point in the future, once we can create the distribution channels. So we need to be able to have manufacturing really well and efficient, and we've got that established. That arrangement's already been signed in Serbia with a very existing manufacturer that manufactures vehicles for airport de-icing and airport cleaning, runway cleaning. Really, really well credible, supply to America, supply to Canada, supply all over the world. Really well-known brand. They've now taken a massive factory and got a massive amount of extra capacity. And basically we've signed a deal with them for them to manufacture it for us. We're going to put our own team in there with them, alongside them, and it'll be kind of a co-joint manufacturing. So we would expect that to be out in Q4, and then tested, homologized. I call it homologization to get it basically certified, because it will still drive. It's not going to drive on the highway, but it still has to cross a road or go through a car park or drive where there are other cars, and in an airport, for example. So we need to get that certified. It's not a massive job, strangely enough, because it's not doing crash tests or anything like that. It's not that type of thing. And then basically we're going to roll that out. And then, obviously we'll look to acquire some distributors. So this is an acquisition target for us. We'd look to acquire some distributors of similar type of products in the US, primarily the US, and maybe one or two in Europe if we can. These are smallish businesses that are selling John Deere or Polaris or Kubota, Kawasaki. They're selling these little ATVs anyway. But we can put our product on the shelf and make sure it gets the airtime. And then look to appoint other distributors. We wouldn't want to buy a whole distribution channel, but we would certainly want to buy a couple of key ones to make sure our product gets out there, and we can start to make sure we're getting airtime. And that's really it. We were looking at a recreational, industrial, agricultural, automotive type sectors, and obviously continue to grow into the safety sector to sell to other fire truck manufacturers who can use our chassis to put their own technologies on. So that's our E-Raptor business, and that will be manufactured in Serbia, as I said, and then distributed through our new facility in the US, in Jacksonville, where we basically will put that under the TVC distribution. So it'll come into TVC, into Jacksonville, be inspected, final check, stamped, and then exported out of there, and then around South America and around the whole US through the distribution channels. In future, we may manufacture it there. Let's see how it goes with the tariffs and how that sort of chapter plays out. So then we go into our biggest one, which obviously a lot of you were sort of our early investors in this baby. And I know it's sort of don't because it's come down low down the list. It doesn't mean it's a low priority for us, because it's absolutely not. Is our emergency rescue technologies business, ERT. Again, this business on its own has the ability to uplist at some point. We obviously, as I've touched on before, we obviously lost a lot of staff. We lost a lot of key products. We've got to basically rebuild a lot of this business. But let's not be disheartened. We're able to modernize with products that don't demand so much cash, modernize products, more AI, more digitization, more products for the modern future issues that we're facing. Some of the products, some of the issues being data centers, being lithium, being, some of this modern stuff that we're dealing with. So, we're in a very positive position on that. So just to summarize, we're going to group the Georgia Fire and Rescue business is going to be rebranded GFR. Sammy's well on with it. There'll be a new website, etc. Excuse me, and a whole range of new products, including some lithium firefighting products and for lithium firefighting technologies, and some specific products for car fires, which are not ours. They're bought in, while we continue to develop our own technologies and actually get them tested. We need, while we know they work, we need to get them tested and certified for insurance purposes. And we're going to continue to grow distribution, and we're looking heavily in the ERT business to really acquire a wildfire business. I know, again, we've mentioned that a bunch of times in the past 2 years. We were really close to acquiring 2 companies, one in Europe and one in South America. And obviously the market shed itself. We couldn't raise the money and obviously had to pull out of the deals. But we're relighting those deals now. I don't think the Europe one is still on the table, but certainly the South America one is. And we're looking for a bunch of other ones. And ultimately we will bring in our own ranges, alongside it to accompany it. There's a bunch of products, whether it's water knapsacks, whether it's fire beaters, suits, whatever, for wildfire. It's a massive drip torches. It's a massive, massive market. And it's one of the fastest growing markets in the fire industry or safety industry globally. I mean, I don't think any country in the world is not having fires every summer now. So, we're excited to kind of develop that. And again, the opportunity of coming back on that with a fresh sheet with, an opportunity where the world is in a different place, really allows us to focus on what we need to do in that space, as opposed to continuing with legacy stuff, which is maybe outdated. Maybe there's better technologies out there. So again, we're in a good position. Having the Jacksonville manufacturing plant gives us a much more scope and capability to do R&D. Previously at Georgia Fire and Rescue or at Bullhead, we just didn't have any scope or scale. We didn't have the money to do it, to do any further R&D there, but we also didn't have the space or the skills, and we didn't have the money to buy in the skills. So we were doing the R&D out of Dubai. Some of it is difficult for the US market. So having that facility there is going to allow us to really scale up our R&D facility and really get that going. It's going to take time because those skills are not ready or made off the shelf. And we don't want to do things too rushed with, and waste too much money. It needs to be done step by step, and we're well in shape for that. We've kind of got a clear roadmap for that, and again, things will start to unfold as Sammy starts to market these exciting things to our shareholders. But I'm sure by now you already can see why we couldn't tell you a lot of the stuff in the past, because we could never execute it. As of the 28th of May, we can execute it, but we didn't stop working on this over the last 2 years. We're really focused on high margin product. We don't want to get into this distribution model in this business where we're making 20-30%. It just consumes too much cash. So, and then there's a whole bunch of new areas, that we need to focus on. I think that are being neglected, such as school shootings. Crime is obviously off the charts in the US. There must be a bunch of opportunities around, technologies around, that's still public safety. What they are and how they look, I don't know. We looked at some technology around school shooters a while ago. I think we might have even PR'd it a couple of years ago. I don't remember. There's a bunch of technologies around there. And as we spoke of earlier, a lot of the OTC companies, a lot of private companies can't raise money. They still can't raise money. It hasn't changed for them. And ultimately, it wouldn't have changed for us had we not got ourselves in the position. I don't believe in luck, as I've told you before. It's where opportunity meets preparation. That's where luck occurs. And that's really where we're at. We created our own bed with QIND, executed on it, have now got that, that asset on our balance sheet, and are now able to deliver our own cash drip fed to fund our own growth. We're not relying on going to raise money at this particular moment, where a lot of these smaller companies are not going to raise money. They're still not going to be able to. So I think there's going to be a lot of opportunities for us to go and do roll-ups and kind of swallow up a lot of these great technology companies that might have one wildfire product, fantastic wildfire product, but they're not able to take it to market. So I think with us now, we're able to come out, take them over, buy them, invest in them, whatever the case might be, bring them into our umbrella, grow our marketing team and kind of really drive these through and add value to our shareholders on that base. So that is really the ERT business and E-Raptor. So that is, SAML as a wrap. Let's call it ILUS Industries from now on. And there we are. HTOO, Fusion Fuels. So obviously an energy company. We sold QIND to it, in an all-share deal. We obviously are the biggest shareholder of HTOO by quite a significant way currently. I know they've PR'd and they've got 8Ks out for a number of transactions that they're working on, which is obviously fantastic, the work that they're doing. And I know JP and the team have worked phenomenally hard there to get that business into shape, shake off some of the legacy issues they had there and kind of get that business really moving forward. Historically, it was a hydrogen business. This is all public information, obviously. I'm not on the board. I'm not involved with that business in any way or shape or form. We're just obviously the largest shareholder, so we just read what you guys read. But obviously through the early due diligence process, obviously I was involved because we sold our business to them, right, QIND. So they were a hydrogen business. Hydrogen at the moment, maybe for the foreseeable future, doesn't really have a future in the majority of cases. It's too expensive. It's too expensive to produce. Even if you're making small hydrogen machinery or that needs hydrogen, you can't actually get the hydrogen easily. Hydrogen distribution is not there. Hydrogen storage is not there. I know in the yachting industry, for example, there's some hydrogen boats. They can't even fill up because there's no hydrogen available. This particular business was making small hydrogen generators. Fantastic business. They're actually one of the few SPACs that really utilized their money wisely. Most of the SPACs took their money and blew it, have nothing to show. They actually had a fantastic facility, amazing technology. But the demand is not there for that product. Governments think they want it, but then when they look at the price tag, they can't afford it. Factories and places want it, they can't afford it. However, there's a massive opportunity in that space for places where it actually adds value to them, such as cement factories, for example. This is just from my own due diligence, and why we don't want to shift. ILUS doesn't want to sell its stock. We don't want to just exit from that position and move on. As much as we want the cash, we'd rather collateralize or leverage against our stock. So we don't need to exit that position because I believe that business is really going to grow. Considering I'm very, very bullish about that business. They've got a period now of consolidation for the next 6 months, probably 3 to 6 months, kind of where they ticking all the boxes, and gradually they've been doing that one by one, meeting all the NASDAQ requirements, getting all the NASDAQ, things sorted out, getting their registrations cleared, which they've done phenomenally well. And, just congratulations to Federico and JP. You guys have done an unbelievable job there. I know it's been a massive, massive uphill battle. But they're now in great shape. They've got their own. I think you saw the registration effective, so they've got a massive funding line available. They've got this ATM in place, this F3. Again, this is all public information that you've seen. So they're really well funded. While they're not liquid with cash, because they're not heavily diluting their stock on the ATM or on the ELOC, they have access to capital, and they've got some really good acquisitions in the pipeline to build that critical mass. And ultimately, they're building that critical mass off the really solid foundation of QIND that we sold them. QIND being a very profitable business, a very strong business. And that's allowed them, the H2O team, to have a platform to build their business on and now execute some more acquisitions. So we really would like to see that business continue to grow. And the 30 plus million shares that we own, as ILUS, which you can see the exact numbers in the disclosures, by the way. We would like to see that share price grow and grow and grow and grow, which is why we don't really want to sell our stock now. We kind of want to be able to leverage against it, and obviously there's a bunch of instruments that we can leverage against it with various different banks and different funding mechanisms and etc. So while we will undoubtedly sell a small portion of the shares, we certainly don't anticipate selling the lion's portion of our shares, but we do have a very clear route to a stable flow of access to capital. And I'm sure our ILUS shareholders would like us to sell, a little bit of cash and be able to have, a liquid position immediately. So for sure we will be dilute, selling a little bit of our stock, over the next few months, just to bring a net liquid clean cash position, and then we'll be collateralizing or monetizing against the balance of our shares, more than likely. Obviously, please, don't quote on that because things are likely to change, and as deals come and go, and as the demand for cash comes and goes, and the terms and interest rates, and there's 1,000 variables, as you know. The bottom line is, from an ILUS point of view, is we have that asset, we have that collateral, and we're able to monetize it in a number of ways. And our preferred option is obviously not to sell the majority of it. So that business is well positioned and completely independent of us. We don't have any board seats. We're not involved with it. I let you know as much as you guys. but obviously, I know clearly what the strategy of the business going forward is, as you guys do, and as I've just shared with you now. And I'm sure JP and the team will be working very hard on, some IR and investor relations and stuff after the AGM next week or the week after, whenever it is. It's coming up soon. You obviously saw those filings. So once that's out the way, then I'm sure they're going to start to really, work hard on the IR and kind of their media publicity. They just want to get that NASDAQ box ticked, because obviously the share price is at 30 cents, and that the AGM and the share price are their last two tick boxes that they need to do for the NASDAQ requirements, and then they're going to be full speed. And hopefully they can take down some of the acquisitions and really take this thing to stratosphere. And then it comes all the way back to you guys, the ILUS shareholders, that it was all possible because of you. Because you bought ILUS stock, we had liquidity, we were able to raise money, we were able to buy QIND, we were able to raise money in QIND, RB Capital, Sky, and the other investors that put money into, Jeffrey Street and all the other Diagonal that put money into QIND to allow us to acquire Alshola Gas and grow that business. We're all grateful, very, very grateful to you. And now those pigeons have come home to roost, and we can all look back and go, yes, while it was very messy at the time, we now see it. We now see the story. We now see what's been delivered. So, that just, to really put it in bold, those shares as we stand today are somewhere between $11 and $13 million of shares. Just to put it into a round number. I give you a wide range because it fluctuates between 29 cents and I think 34 cents a few days ago. So either way, $11 million of liquid cash into an OTC company is nothing small to sneeze at. And we need a few million for us to achieve everything we want to achieve for this next chapter. So we'll be very, very well capitalized. So the replay business is, we're calling it Replay Technologies, but fundamentally it's the technology for recycling or repurposing materials. Mainly around the minerals. So whether it's oil or whether it's gold or whether it's any of those sort of precious metal type things, battery metals, etc. There's going to be a lot of marketing on this. I'm going to try and keep this one quite brief because it's a very, very exciting story, and I don't want to give you a 3-minute clip on it and try and cover all the details. I'm just going to give you a taster. You guys can go and do your own research on it. You're going to hear a lot about this business over the next little while. Sammy's really going to go to town on the marketing of the business because everybody needs to understand it. Most people don't understand it. It just gets categorized with recycling. Let me be clear, we are not a recycler. When you hear recycling, you imagine driving down the road and seeing all this crashed up cars and, big cranes squashing pieces of metal and throwing plastic in the bin. That's not our business. This is a very high technology orientated business. It's reprocessing specialist materials. So the first one, obviously, our main replay business currently now is obviously, as we take delivery of these first big machines, is really to reprocess waste electronics. And that's everything from mobile phones, laptops, iPads, microwaves, TVs, you name it. And really, we put it through a big machine that grinds it down to a powder. It separates all the precious metals from the powder based on density, magnetism, you name it, chemical processes, etc. It's almost a totally automated process. And it really is about, and obviously the output is all the different metals, platinum, palladium, copper, gold, silver, titanium, you name it. It's pretty much everything is in electronics. Now, why is that so great? Is the copper alone covers the entire operational cost of the business, more or less. Obviously subject to copper prices, but more or less. Copper is a massively growing shortage of resource. Obviously, every house that's built, we've got a growing population globally that needs more houses. Houses need cables. Cables are made of copper. The more cars that are on the road, because of growing populations, they need copper, because of wiring and different pieces in the car. The same then applies to gold. More people means more cell phones, means more electronics, more data storage centers, etc. They all need these circuit boards. Circuit boards all have gold and copper on them and all the other precious metals. There's a massive shortage of this stuff, especially with this tariff war that's going on. China saw this writing on the wall early and really went aggressively after kind of those mineral resource reserves around the world. And they have access to a lot of those resource reserves, which the US is still struggling to get their hands on. I think, Uncle Trump, Donald Trump, has done a great job securing some of those mineral rights with Ukraine and some other parties. But it's a real issue, and it's going to be an issue for our life for the foreseeable future. More cell phones, more people, more cars, more houses. That all requires those metals. Coming back to the basics, why do we need to continue to dig it out the ground if there's that much resource on land that's been wasted? So everybody has, I'm sure, I don't think there's one of you probably, and if there's one of you, email me, please. I don't think there's one of you that doesn't have a bunch of wasted cell phone chargers or cell phones lying in your drawer or cupboard somewhere in the house or garage or car. Everybody has it lying around. Cracked cell phone, they buy a new one, they just leave the old one. Get a new charger, the older dog chewed half the old one, you just leave it in the drawer. It's just what happens. It's just life. If we can access that stuff and monetize that for people, the people can actually monetize it and get money out of it, and we can reprocess that and repurpose those minerals, it's literally a gold mine. So, and they call it urban mining. You can go do a lot of research on it. The US has been left far behind in this sector for some reason. I don't know whether it was regulatory in the past or whether it's just the size of the country and the logistics are too difficult. I have no idea. Europe is very, very advanced and technologically advanced in this sector. But there's massive amounts of areas on the outskirts, Eastern Europe, almost nobody doing it. Most of Africa, nobody doing it. Africa is the dumping ground for waste electronics. But there's nobody really doing it properly there. So we're going to be setting up our first facility in Serbia, going back again the last 2 years of our lives. We'd done all this groundwork with the Serbian government and got full support and grants and all sorts, and we just couldn't finance to get it going. Now we're just basically going back and turning on the lights, relighting the fire, and going to fly. So all our new equipment will be delivered into Serbia, and we'll be flat out on that as the first pilot scheme, and basically reprocessing waste electronics. To put it into context, 1 ton, so 1,000 kilograms, I don't know what you call that in pounds, but one ton of cell phones, it's about 8,000 phones, give or take, depending on the model and size, etc., and age. Older ones are heavier, the newer ones, etc. It's borderline 8,000 phones. That has around 240 grams of gold per 1 ton of cell phones. What that, in comparative to normal mining is around 5 grams of gold per ton on a global average. Obviously, the average varies, right? But it's globally 5 grams of gold per ton from a gold mine around the world. We have 240 grams of gold from 1 ton of cell phones. And that's the profit, because the cost covering comes from the copper. All the copper out of it pretty much covers the entire plant operations. Then we've got all the specialist metals, platinum, palladium, iridium, and all these other specialist metals, iron, tin, aluminium, that's going to come off those circuit boards, all through the same machinery. That's all literally straight profit. We were talking earlier about maybe repurposing the ILUS coin. There's something that's really in mind, that maybe we could tokenize some of those commodities. I'm not saying that's what we're doing, but it's something that's going through my mind. It's something that we're sort of doing a bit of research on how it would actually work. We would hold the commodity reserves of some of the stuff, and in fact release ILUS coins against that value, because obviously those commodities are going to continue to go up in price. There's a shortage of them globally as the world glows. So I think it's a very exciting business, and it's actually not a complicated business at all. We've developed during this period, a small micro desktop machine, literally the size of a microwave, that you would be able to put in the electronic circuit boards, and it strips off the metals into a liquid, and then we're able to extract the liquid without any really poisonous chemicals. That's been piloted at the moment with a manufacturer that we managed to convince to actually do the R&D for us under their cost. Unfortunately, means we don't own the IP, but we own a right to the IP. But that will allow us to then roll our second model out. So just to summarize on that, the first model is push it through Serbia and basically waste electronics, then to take it to Egypt. We've developed a good relationship with the Egyptian government. There's hundreds of millions of people there, hundreds of millions, and just dumps of waste electronics. And a very low cost of operation. So we'll set up our second facility there in Egypt. And then after that, we would have perfected our pilot model to then roll it into the US at some point in 2026. So basically what we will be doing in the US is kind of a hub and spoke system, where we will franchise out most of the towns to people that have sort of semi-retired, partly retired, 401k type guys that they don't want to stay at home. They're driving their wife crazy. Their wife's driving them crazy. They need to top up their income a little bit. They need $500 a week or $1,000 a week, whatever, just to top up their income. They're not, they don't want to sit at home. They're still able bodies. And we'll franchise to them, give them a soft loan, give them that small machine that I was telling you about, and a small crusher. And basically they will run around there. We can't go around all the little villages and all the little towns around the whole of America. Impossible. Just costs too much, and we just don't know the landscape and the geography. But little Bill, who lives in some tiny little town, he knows the library, he knows the scout hall, he knows the people in the area, he knows the coffee shop. He kind of knows everybody in his own little town. You know how it works. The village. And he's able to do little deals with everybody and put a few boxes out that we'll give him to collect the waste. And he'll take it back to his house in his garage or his little shed or his little lockup that he'll take, crush the parts, put it through this tiny machine, the size of a desktop, as I said, in a little microwave, put it through, extract the first layer, and then crush the rest of the stuff into a powder, and we will collect that in bags from him and pay him a fixed price per week to collect the stuff. So every week or every 2 weeks, whatever it might be, as I said, we're still perfecting it, we'll literally send a milk round to go around and collect all the stuff from him, and he'll just get a weekly income. So he can work as hard as he wants and go around and collect all this stuff. Meanwhile, we build a seriously big recycling center or seriously big refinery. We bring in all this stuff, refine it, reprocess it, and boom, off we go. And I think we can take the US market very quickly with that model. And then we become very, very interesting for either an uplist or an uplist play or a total outright sale to a minerals company, because mineral companies are all under pressure to be a little bit more green, and the cost of mining is becoming more and more expensive. So, they're having to go deeper and further and farther and pay more in taxes and stuff. So if they can now acquire somebody that's already operating on their own doorstep and already producing gold, and the precious minerals without too much effort, I think will be a very, very, likely target. As I said, we're not the first ones to do it. There are a ton of people doing it, but it's certainly an underdeveloped market. So that's really the replay kind of, let's say, e-waste business. The second part of the replay is something we don't have yet. So, this is a forward-looking statement. We may not be successful in acquiring someone. We may not be able to close a deal, but one thing is we can do now is we can finance it, which previously we couldn't finance these deals. So we're able to finance it now. We've got to do the right deal. And we're looking at oil recycling. So we're looking at a substantial business. It's in Dubai. Real nice business, big refinery, and they basically have the contract to reprocess and recycle maritime sludge, which is basically the waste oil and the sludge out of ships. Obviously, Dubai is a big shipping destination. Stuff comes in from Asia here, gets repackaged and ships out. The whole of most of the Middle East use Dubai as a hub. It's a global hub. So there's a ton of ships come in here, and really we're going to perfect the technology. You take the sludge, basically put it through a pyrolysis type of process, and return it back into various different forms of oil, gasoline, diesel oil, paraffin, kerosene, industrial oil, and then basically you can either blend it and turn it into additives and turn it into other products, and then basically sell it on as a bottled product to petrol station forecourts, supermarkets, supercenters, whatever. Or we can just wholesale it basically, and we've got a bunch of offtake agreements in that business with Indian governments and some other different governments around the world that'll basically take whatever we can produce. We're a long way. We signed an MOU. It's not binding, hence why we didn't need to PR 8K it. We're a long way down the due diligence, a long way down the strategic discussions and the strategic reviews. I'm relatively confident we might do that. We might be able to do that deal. As I said, now we can finance it, so that's not a worry for a change. Now it's really about getting the strategy right and the security around the licenses and the environmental risk and all those type of things. And if we're able to execute on that, that will then lead us to a number of other Middle Eastern opportunities, because there's not many people doing that. And the same goes on to sludge from the refineries and various different other oils we can run through the same plant. And then, we're looking at a second facility. Should that deal not work out, we'll start to engage more seriously with a second opportunity, same type of business. And then again, if that works out really well, we would look to expand it into other markets, Eastern Europe, Africa, whatever. And then I'm particularly personally interested in us looking at the reprocessing and the pyrolysis of tires. Tires, as again, coming back, more bigger population, more cars, more distribution, more tires. Tires don't break down, as you know. They're not environmentally friendly. Historically, most governments just dump them. There's just tire dumps all over the world. Type into YouTube Kuwait tires, and you'll see half the Kuwaiti desert is full with tires. And there's a good opportunity to basically, the technology now exists, and it's clean technology that you basically take the tires, put it through a machine, and it literally turns it back to oil or diesel or kerosene. And then we can take that same diesel, paraffin, kerosene, whatever, stick it through our refinery plant, blend it with other additives, and turn it into really high performance lubricants or whatever it might be. We've done a bunch of desktop research. As I said, the last 2 years, we went to sleep. We were working bloody hard. We just didn't have the money to execute on stuff. And I'm quite bullish that we can create a great business out of that. We've got the roadmap of how we might do it, what we might do, what machinery, what licenses we need, where we would place it, where our feedstock supply would come, who would take the offtake. It's just about execution now, and obviously we don't want to run faster than we can walk. We've got to go step by step, and we've got to be able to use our cash wisely, and we've got to make our cash work and pay for itself. As I said, we sell a little bit of our stock that we're going to do now, monetize the rest of the stock or leverage the rest of the stock, and then basically utilize that stock for, so that cash for the first round of development, get those products and those businesses working, and then gradually start to introduce the rest, and hopefully we can do some decent acquisitions along that journey. So I think that sort of encapsulates that business in general. So I will wrap it up there. So just to close off for everybody, I'm sorry we didn't have the face-to-face shareholder meeting this year, so far as we would have liked. I feel it was in everybody's best interests, to roll it on. Hopefully we would have found these sessions, very, very, very informative and, very advantageous to your future thinking in terms of your shareholding. And I apologize profusely and sincerely for the last 2 years. While I have to take responsibility, and I do take responsibility for it, it certainly wasn't an easy time, and it wasn't, the tough times weren't through our own doing, our own making. But ultimately, we didn't do well enough in terms of being able to inform you on the market. But as I said, it was a strategic decision, because if I told you about all this stuff 6 months ago, or a year ago, 18 months ago, you would have laughed at us and said, "Come on, another idea that you guys can't deliver on." We didn't deliver on stuff for a reason, because we couldn't get the cash, not because we were incompetent. And we took that opportunity to basically shut our mouths, work hard, get ourselves ready. We knew what we were doing was right. We knew our strategy was right. We've proved that it was right. We now have this asset, this liquid asset. We're now going to monetize it, and we're now going to do the same over and over again. ILUS Industries is a phenomenal business. Both businesses in there, recapping, E-Raptor and ERT, have got their own uplisting potentials, sell potentials in future. Then we've got the replay business, our H2O asset, our DRCR investment that we've got. So all in all, while our share price is in the gutter, and we've got a bloated share structure, I believe we're in a very, very, very good position for the next chapter. And the next chapter is really 3 years. The next 6 months is really getting the show back on the road, getting you guys briefed, getting the marketing going, getting these first products rolling, getting our replay business going, getting some marketing out there. People can see it working and believe in it. Now, I don't expect you to believe in something until you've seen it. I know that, the sort of, a pessimistic view of OTC in general and of us. I understand that, and I'm very well aware that now it's about us proving to you. I hope that we've given you some hope with that we've proved to you by the QIND deal. Certainly I think we've probably proven more than most other OTC companies. But it's still not good enough. We now need to execute on these other businesses, and we're there. We're right there, and I thank you for your support. I thank you for your patience. And we will have the full shareholder meeting in November. Sammy will be publishing the dates pretty soon. It'll be the same venue. We've already paid the venue, so it'll be the same venue, same setup. Just basically a date that's more appropriate for everybody to attend, where we can get the more value. And also, I'm hoping we get a really good attendance, because by then we've executed a number of these things we've promised, and people are coming really bullish, not coming with pitchforks. And that's really where we are, guys. So, we will do a Q&A session. Sammy will publish something next week about a Q&A session, whether it's going to be online, whether it's going to be a written Q&A session by emails. We're not sure yet. But we're definitely going to hear your questions. Now you've had time to digest everything. You've had time to, talk internally, do some research on the market, do some research on all the moving pieces. I'm sure you'll have some much more strategized questions, which again is way better than sitting at a shareholder meeting and then firing questions to me that you didn't have time to go and do your own research and actually have educated questions, if you mean it like that. So I will wrap it up there. Thank you for your loyalty. For those of you that are still with us, thank you for your support, and wishing you well for the future. And thank you for standing by us, and we hope to have a long walk with you. Thank you very much. All the best.